Welcome back. Taking a look at the auction market, there are 2,130 auctions this week across Australia. In New South Wales, there'll be 1,365 auctions. 1,174 of those are in Sydney. In Victoria, just 246 auctions, 244 of those in Melbourne. Of course, the AFL Grand Final there slowing things down this weekend. 241 auctions in Queensland, 137 of those in Brisbane. South Australia will have 141 auctions. WA will have 11 auctions. Tasmania 2, and the ACT will have 122 auctions. Taking a look at the most viewed this week in auction land, and in New South Wales at 103 Clark Road, Hornsby. It's a 5-bedroom house on over 750 square metres. It has a sunshine-filled backyard, a spacious floor plan, a price guide of $1.5 million for this one. Over in Victoria now at 22B Mawara Crescent in Chadstone, it's a 4-bedroom house with a light-filled lounge and timber floors. You can see there also a huge covered deck with outdoors with a wraparound courtyard. The price guide is between $900,000 and $950,000. Over in Queensland, 36 to 38 Velvet Street, Pine Mountain is a huge block, 2 acres plus. It's a large family home with a dam on site. The big draw card for this one, the extra high 13 metre by 18 metre shed out in the backyard. And over in South Australia, 133 Leicester Street, Parkside, a 2-bedroom cottage in a prime city fringe location, also with rear lane access. The price guide for that one is $700,000. And finally, over in the ACT at 4 Sterry Place in Waniosa, it's a 4-bedroom single-level home on 800 squares. It's got a central kitchen with a breakfast bar, ducted heating, a fireplace. It's move-in ready with low-maintenance north-facing backyard. The price guide for that one is $875,000 plus. But now to the top listing of the week, a beauty at 361 Arthur's Seat Road in Red Hill, Victoria, a gorgeous lifestyle escape house in wine country on about 1,500 squares. Interiors are inviting with a formal dining, marble kitchen, wood-burning fireplace, 4 bedrooms. Outside, there's an entertainer's deck, heated pool, an in-ground trampoline, beautiful manicured gardens too. The price guide for that one is $1.9 to $2.09 million. And for more on the auction market, I spoke with Cameron Kusher from REA Group and started by asking him how the AFL Grand Final is impacting Victorian auctions this weekend.
Yeah, definitely. We always see this, that the AFL Grand Final sees the market really slow down. But, strong auction volume still in New South Wales at the moment. And we would fully expect that next week there's going to be a big ramp up in the number of auctions in Victoria. And that will run basically until a week or two before Christmas.
All right, let's talk interest rates, because that's what everyone wants to know about. We've had some commentary, obviously, from the RBA this week at the RBA meeting. Rate cuts look to be off the table for now, particularly after that, the jobs number that we saw. So what do you make of that?
Yeah, definitely. I mean, I think a lot of people were hoping that we would get interest rate cuts this year. I know certainly at the start of the year, a lot of people were saying September, October. That's looking increasingly unlikely. Well, September's gone now. And I think the market's now pricing in a cut in February, and that seems pretty reasonable to me. But of course, a lot of that will really depend on inflation. What was interesting, though, was it looks like some of the hawkishness has come out of the RBA statement. They weren't talking too much about the risks of higher interest rates, just that interest rates were going to be on hold and they don't see cuts in the near future.
Well, we did see that monthly inflation number come back into the target range, although I think some of this is to do with government relief, which may fade off. What did you take out of that inflation read?
I mean, the monthly CPI indicator is still experimental, and we know that there's obviously a preference to continue to look at the quarterly data, but it is interesting. We have seen in the past, though, it can give you the wrong indication of what's actually happening. But I think the most important figure was the trimmed mean inflation, and it's continued to come down, which is positive, but also it was still 3.4% over the last 12 months, which is outside of the RBA's target range. And we know that the Reserve Bank is going to be watching underlying inflation rather than headline inflation, because it's not going to be impacted by all the subsidies and rebates that governments are offering, which, yes, they relieve things at the moment, but they're also inflationary once they're removed. So, yeah, look, progress looks like it's being made, which is positive. We all want inflation to come back into the target range. and stay there. But I think it's not at a point yet where the Reserve Bank would be considering interest rate cuts.
Well, speaking of that and the relatively high interest rates we've got at the moment, how are households handling this? Because I know you've seen some recent data. Are many getting into trouble?
No, I mean, the Financial Stability Review was published yesterday by the Reserve Bank, and it showed that there has been an uptick in mortgage arrears and the number of people behind on their mortgages. Now, it's still very low on a historic basis. Interestingly, when you look at the data that comes out from APRA each quarter, it's actually owner-occupiers that are seeing a higher proportion of loans in arrears than investors. And I guess that really speaks to the fact that people that have their own home are trying to hang on to it as much as they possibly can. Whereas an investor, your investor property is probably not really, you're not as emotionally attached to it and you're more prepared to sell it. But I think generally, if you read that Financial Stability Review, people are still in a good position. Obviously, in most parts of the country, property prices are still rising. The total value of residential land and dwellings was up about 8% over the past year. And you know, if you look at LVRs now compared to when people bought them, very few people are in negative equity. Now, that's not to say that that can't change, but people are pretty comfortable at the moment.
Well, as you mentioned, that value of residential land and dwellings, that's interesting because that has reached a new high. Do you expect it to sustain these levels or continue to climb going forward?
Well, the household wealth data that came out this week was for the June quarter. And of course, we know from July 1, a lot of people did get tax cuts. We can already see what's happening with property prices since June, at least to the end of August. And we know that prices have continued to rise, albeit the rate of price growth has slowed. We have seen some falls in Melbourne, though, for example. In terms of, you know, shares and things like that, well, the equity market's been pretty strong as well. So I think it's reasonable to expect that we'll continue to see household wealth pushing higher. And then, of course, the next thing will be when we do start to get interest rate cuts, how the market responds to that. We know that typically when you get interest rate cuts, mortgage borrowing capacity increases, and that's actually positive for property prices.
Yeah, it'll be really interesting. You're right. Lots to watch over the coming, I guess, quarter, I could say. Cameron Kusher, appreciate your time on the program. Thanks so much for joining us.
Thanks for having me.